Okay, this lesson is on pay calculations. It follows on from lessons on income tax and national insurance. It's part of the personal finance module for core maths. Okay, so far we've looked at 2 deductions from our salary, income tax and national insurance. What I'm going to start this lesson is with 3 other deductions: student loans, pension and tax-free loan schemes. And then we'll use this information, as well as what we've already learnt, to do some full pay calculations for various case studies. Okay, starting with student loans. So student loans, generally, if you go to university nowadays, the vast majority of people take out a student loan. It covers their tuition fees, okay, so the amount that you pay to the university to study there, and also can cover accommodation costs and general extra money for you living costs. Okay, so it's not like a standard loan. You don't have a set repayment scheme. You pay student loans back through your salary later on, and you only pay it back when you reach a certain salary. And it's quite possible that nowadays that some people that take out student loans won't end up paying back the full amount. Okay, they won't get to the amount. They won't get to that point. So this is some information. This was taken from 2019 exam paper for core maths. This was information from there. So at that point, you paid 9% of your gross income to your student loans, and there was a threshold. So the threshold where you started paying depended on when you started university. So if you started before September 2012, then the threshold was 17,775. If you started after then, the threshold is £21,000. That's when you start paying those. Okay, so we'll look at that more in a minute. Right, second was workplace pensions. Okay, so generally nowadays, your employer, whoever employs you, has to offer you a workplace pension. Okay, so it's a way of saving for your retirement. So you might not think, no, retirement's a long way away. However, it's definitely worth saving a workplace pension, saving for a pension now, because the longer you're saving for, the more money you'll have when it comes to retirement. How they work: so you put a percentage of your pay into the pension scheme automatically every pay day, and then in most cases your employer will also add some, and sometimes you can get some tax relief as well from the government. Okay, so a little bit more detail there. All employers must provide a workplace pension, which I've already said, and generally they will automatically enrol. However, you can opt out of a workplace pension, and generally these are the minimum contributions at the moment from 2019. So your minimum contribution for you would be 5%, and for the employer an additional 3%. So that means 8% of your salary every month will go towards your pension, and then obviously pensions also grow because they're invested in certain things. Okay, third possible deduction that I'm going to look at now is a cycle to work scheme. So there's certain schemes which you can pay for things out of your salary and then pay back through your salary every month. Okay, so how it works: you apply for the scheme, you buy a bike from an eligible store, you then pay back tax-free, so before income tax, before national insurance, through the deductions on your payslip. Okay, nice and simple, and we'll talk about that shortly. Right, so I'm going to go through 2 case studies now. This is the information that you'll need. It won't come up on the next page, so it might be worth taking a photo of it now, or I've added it to the assignment on Frog, so you can print that out and have that to hand. Right, example number 1. Frank earns a salary of £52,000. He started university in 2010 and is still paying back his loan. He has a workplace pension and contributes 6%. He has bought a bike for £800 and is currently paying back in monthly instalments. Okay, so first of all, we know what Frank's salary is, so we can work out what his income tax would be. Just get a pin on the go. Okay, so let's first of all work out income tax. So if you remember, his first £12,500, so 0 to 12,500 is 0%. It doesn't pay any tax on that. Okay, next up to £50,000. So he pays 20%. So this is basic rate. 50,000 minus 12,500. That amount you're going to pay 20%. So working that out, £37,500 times by 0.2 gives you an income tax of 7,500. That's over the course of the year. Now we need to work out also the higher rate. So the higher rate is above 50,000. So 52,000 is 2,000 more. So rather than put it into this subtraction, I'm just going to do 2,000 left over, pays 40% on. £800. Okay, so then yearly, the total is 8,300, and therefore monthly £8,300 divided by 12, 691.67. Okay, next work out the national insurance. NI. Okay, national insurance you work out from your monthly salary. So first of all, we're going to have to work out monthly salary. Or gross pay. Is equal to 52,000 divided by 12. £4,333.33. Okay, so national insurance. You do not pay any national insurance up to £792 a month. 0 to 792, 0%. Okay, from 792 up to 4167, you pay 12%. So it's 3,375 times by 12% or 0.12 equals £405. You then need to work out the higher rate. So that is the amount left over. So 4333.33. minus 4167. That you pay 2%, 0.02. Or so £166.33 times by 2%, then it's £3.33 rounded. And the total national insurance will be equal to those two added together, £408.33. Okay, next let's have a look at this student loan. Okay, so looking back to the student loan, he started in 2010, so that's before the cutoff. So his threshold is 17,775. Let's write this down. Student loan. So for the first 0 to 17,775 equals 0%. Doesn't pay anything on that. But the bit above, so 52,000 down to this amount, is going to pay 9%. So that is equal to £34,225 times 0.09 is £3,080.25. However, that's yearly, so monthly divided by 12 256.69. Okay, finally we have, in fact, we've got two more things. We've got a pension. Again, which is a plain 6%. So I'm going to do it from the monthly salary. 4,333.33. Factor 260. Two decimal places. And then the final thing is this bikes loan. So you've got £800 divided by 12 because he's paying it back in monthly instalments over the course of the year. £66.67 per month. Okay, so this is the income. We've then got our deductions. Of 691.67. That's income tax. I'm short that with IT. Got national insurance for 833. Student loan 256 69. Pension 260. And the bike 66 67. So the total deductions one six 83.36. So the pay would be this amount here minus this amount here equals 2649.97. Okay, that's example number 1. Example number 2. Got Rebecca. Got basic salary of 27,000. This month she worked 7 hours overtime, paid at £20 an hour. She started university in 2014 and still paying back a loan. She contributes 5% of her salary to a pension scheme. Okay, so first of all, I want to work out what Rebecca's basic salary would be. So I need to know yearly and monthly because there's two. I need both of those figures. So yearly, she's got 27,000. And you're going to assume she does this every month, even though she might not necessarily do it every month. For the purpose of this monthly calculation, you need to assume she did it every month. So it's 7 times 20 for this month, and then we need to assume she did it for all 12 months. So that gives us 28,680. So that would be a yearly pay, and then a monthly pay will be equal to £2,390. Okay, so first of all, income tax. Pays nothing up to 12,500. And then from this amount here, 28,680, she pays the basic rate of 20%. So in the year, that's £3,236. In a month, Okay, national insurance. Okay, so we need to use the monthly salary. So 0 to 792, we pay nothing. And 2390 to 792, 12%. That's 19176. National insurance. Okay, she's university loan. Let's do it down here. Okay, so she started in 2014, so she has the higher threshold of £21,000. Okay, and her yearly salary here is 28,680. 28,680 minus 21,000 is the amount that she's paying the percentage on, and that would be 9% in this case. £691.20, and that's yearly, and we want monthly. £57.60. Okay. National income tax, national insurance, student loan, and then we've also got this pension scheme. So pension, straightforward 5%. So 286. No, it's not. It's the monthly. 2390 times by 0.05. £119.50. So gross 2390. Deductions 1, 2, 3, 4. So total deductions 638.53. So net pay 2390 minus 638.53 equals 1,751.37. And that's how to calculate your pay.